everyone to the channel too also as well. Thank you for joining. Um, on this channel, we talk about ways on how to build credit, how to increase your credit score, how to get approved for the lowest payments on mortgages, lines of credit, loans, personal and business too, and how to travel the world for free, earn extra money using credit cards. And if you're interested in those things, go ahead and hit the subscribe button, hit the bell for notifications too. That way you will never miss a single video as we make them here on this channel too also as well. Tonight's topic is going to be how to get approved for a mortgage. And we are having a special guest with us here on our show tonight by the name of Jason Vanhoose. Jason Vanhoose is one of our subscribers and has been for a long time. Is actually one of our veterans since we first started the channel, actually. So he's going to be sharing with you his experience with getting approved for a mortgage. So if you have any questions or if you have any comments, just go ahead and leave them, inside of the chat, and we will address all your comments, all your questions too also as well. What we've been doing recently is we've been starting to getting to do the topic first, and then we've been answering the questions after. So that's how we're going to do it pretty much here tonight. We're going to be trying to do the topic and get it out there first and foremost. So the reason being for that is because if anyone is watching, when people start watching this live stream here on the replay, they will be able to get the actual content first, before any of the comments and questions. So a lot of people like to get that, they like to be able to do that too also as well, including myself. I like to be able to get all of the content out there, first and foremost, when I'm watching anything like a video or even a live stream too also. So it helps, when people are viewing, to get, all the content first and foremost. So right now I'm trying to get Jason into the live stream with us. Jason, if you're watching, go ahead and click on that link so that way I can bring you in here with me. Alrighty. I'm trying to access my comments too at the same time. So let's see, how can I do that? All right, I'm gonna have to try on my phone for now until I can hold. Okay, yes, I see your comment there, Janelle. Hello and welcome everyone. Everyone, please give a warm welcome to Janelle Leone. Thank you for joining the stream. Everyone, please say hello to Janelle Leone too also as well. Janelle has always been a blessing to this channel. She helps me to recognize comments, and she lets me know every time if I miss a comment, or a question too also. So everyone, please say hello to Janelle Leone too also as well. And she said hello to Tech Unboxing Videos. Yeah, I guess you had left a comment, Tech Unboxing Videos. And as soon as I can get here into the comments, I will. Okay, I see it now. As soon as I can get into the comments myself, I will be able to see your comment. There we go. Tech Unboxing Videos. Everyone, please give a warm welcome to Tech Unboxing Videos. He says Jill is here. Okay, well, welcome, Jill, Tech Unboxing Videos. Thank you so much for joining us. We really appreciate you. Right now, we have 7 people with us here inside of the live stream with us. So everyone, please hit the thumbs up button if you're here. It helps YouTube to better promote the video so we can get this in front of more people. So everyone, please hit the thumbs up. Also want to welcome to the chat Curtis Davis. Curtis Davis, welcome back, buddy. Everyone, please say hello to Curtis Davis. So without further ado, Our topic today is how to get approved for a mortgage, starring our special guest, Jason Vanhoose. And we're going to put Jason on right now. So as I put here on the screen, all your questions and comments, we will address all of them at the end of the topic. So everyone, please welcome Jason Vanhoose. How you doing, Jason?
I'm doing good, buddy. How are you doing? Can you hear me good?
Yeah, I can hear you perfectly there, Jason. Can you hear me okay?
Yeah. I was going back and forth debating about using a laptop or my phone. So I decided to go with the laptop because I was getting too many messages on my phone. So
Okay, not a problem at all. So Janelle says hi, by the way.
hey, Janelle.
Okay, awesome. So basically, what we're gonna do is try to, get into the topic, and then we'll answer as many questions and comments as we can at the end of the topic, or when the topic is over. We'll try to answer as many comments as we can. Too. So, Jason, we wanted to talk about how you got approved for your first mortgage. Um, First of all, do you enjoy the home that you got approved for now? Do you like it?
Yeah. We're still trying to get settled in. You know what I mean? It's been kind of a whirlwind. It all just happened so fast, because I just started this process June the 1st.
Mm-hmm.
I didn't have no plans on buying a home.
Right.
I was just sitting around one day, scrolling through YouTube and different channels and stuff like that, researching loans,
Mm-hmm.
and I learned that you actually have to have decent credit to buy a house. And I was always
Right.
under the assumption that I didn't have good credit because when I went to finance a car a few years ago, I got a bad interest rate and they shotgunned my credit everywhere. And I was told, this is the deal you got to get, 3 years, $500 some a month. And I thought, well, that sucks. I didn't know you could actually fix it and you could work on it. So it was kind of a whirlwind, but yeah, I'm enjoying it.
Oh, okay. Awesome. So what do you like the most about your new home?
Well, we got a lot of room, that's for sure. It's over, counting the basement, it's over 3,000 square feet. So it's a lot more house than what I wanted to buy, but it's what the wife wanted, so it's what we got.
All right, awesome. Okay, great, awesome, Jason. So from what we've been researching a lot on, we made 3 videos here on this channel. We also had another guest star from Delta Credit Restoration YouTube channel named Michael, and he talked about how to qualify for a mortgage. And we went through a lot of main points on what lenders are looking for and how to be more lendable. What did your lender ask of you when they were trying to review your credit application during the credit application process?
Well, honestly, I learned all that on my own before I even went in. Really. I knew when I went in and I sat down and talked to the lady before I did my application, I knew obviously they pulled a different score than what we have access to. I was aware of that. I pay for the Experian app on my phone. Of course, use Credit Karma, Wallet Hub. Those are all Vantage scores. And of course, you get your scores from your Discover and Citi and all that. So I had a ballpark of what my FICO was. So I basically went in and asked her what she thought I could get and if I could get approved at this score. And she said, well, of course it won't be the same score as what we pull because it's different. What she used was an older FICO version. I'm not sure what it was. She said, I think it was like FICO 2 or something like that. I'm not sure what it was. FICO 4 maybe. But she basically said, we won't know until we pull it. So
Mm-hmm.
I went ahead and done everything. And let me tell you, it was the longest hour of my life waiting to
Oh,
hear back
really?
from her. Well, because I was so nervous, because at that time on
Uh-huh.
the Experian app,
Mm-hmm.
it showed I paid for it to update that day so I would know my other scores. It showed
Right.
my Experian was 702, my TransUnion was like 680, and my
Mm-hmm.
Equifax was like 688. And then my Wallet Hub was like over 700, but I don't really pay attention to that. I just kind of use that as a guide. But I was
Right.
still nervous, you know what I mean? Because I didn't know
Right.
what they pulled.
Uh-huh.
So it was a quite an experience, let me tell you.
Oh, wow. I could just imagine the experience there, but it sounds like you pretty much had some good credit scores there. I think you mentioned a 702 and 688.
Right.
Um,
Yep.
those those were FICO scores.
Yeah, that's what I have access to on my Experian app.
Uh huh.
The monthly monitoring service I pay for through them, which I knew uh, it was a FICO too. I had to look on my phone what she pulled, which
Right.
which was kind of odd because the app I pay for, if you go in and click on it, it
Uh huh.
says it's an older FICO score version used primarily in mortgage lending.
Hmm.
So I just thought it's something similar. And it could have been a big coincidence, but the FICO 2 that was on my Experian app was the exact same score that she pulled.
Okay.
So I thought I was pretty excited about that because it was only 8 points lower than my actual Experian score. So we got a real good
Right.
rate and
Hmm.
everything like that. It was really a pretty smooth process
Uh
once
huh.
I went in and got approved and stuff. But the hardest part was June to the end of August,
Uh huh.
getting ready for it and getting my credit cleaned up and getting my score bumped up. I mean, this was all in June, July, August. This is all in 4 months.
Right. Oh, okay. So this was all in 4 months before you applied.
Yes, yeah. We didn't apply until I'm thinking it was the end of July. July 31st is when I applied, and we
Okay.
just closed August the 26th.
Oh, wow. That's pretty awesome. So you really, so it was pretty much a fast process. 4 months. How did you feel about that? I mean, were you like kind of like really anxious to get everything, your credit score and your profile and everything tightened up? Because 4 months is not a lot of time.
No, it's not. Well, when I started in June, my intentions was not starting to buy a house right now. It was
Uh huh.
2 years from now or a year or two from now. But
Right.
when I started my credit, I knew nothing about credit. I was never taught
Right.
in school. My parents never taught me. No one ever showed me. I didn't have any clue or idea about credit until I started. I watched you. I watched a few other guys, and I thought, hey, I could do this. And I went out and I got a few secured credit cards. I got the Discover It secured card, only $200. I
Oh,
got
to
the City.
discover it. Did you get to discover it secured? You said.
Yes, yep, I got that.
Oh,
Yep.
okay.
Uh, Only $200. That was all the deposit I put down on that.
Oh,
Uh,
wow. Did that one upgrade to
it's been
unsecured?
it's been 6 months. It hasn't
Okay.
upgraded yet. So now I got the City secured card also. Okay.
Okay.
Uh, $200 was all that deposit was.
Wow. Awesome.
So I kept those two cards along with
Mm-hmm.
the only thing I had good on my credit report was an installment loan, which was that vehicle that I had good payment history on for 2 years.
Right.
So I got those 2 revolving accounts, and when those hit my credit, my score went from a 578 to a 636, like that.
Wow.
Because I had no credit cards on my report.
Right.
So that was a drastic jump right there. And I saw that and I got excited. I'm like, oh, okay, I can do this. Because I had nothing bad on my credit. I had 2 or 3 medical bills and like 1 missed student loan.
Okay.
That was it. So
were those collections?
Yeah, I had they was all under $200. I had like an $86 medical collection and a couple $100 medical collections. But see, when I started all this June the 1st, I hired Lexington Law, and I told myself, I'm going to hire them on June the 1st, and I'm going to give them 6 months. I'm going to set them up on auto pay, and I'm just going to out of sight, out of mind, and pretend like they don't even exist.
Right.
I'm going to build my own credit, work on establishing my own credit, and let them work behind the scenes, because I don't have time to do all that. I got a job and married with kids, and it worked out. It took them a couple months, and stuff just started coming off.
Wow, that's awesome. So it only took Lexington Law like about 2 months, and they started getting deletion.
June, July, about the end of July, one negative. Like, say you got 1 negative on your credit report.
Right.
Say you got a medical bill on your TransUnion, Experian, and Equifax. Well, they count that as 3 negatives.
Okay.
You see what I'm saying? So when I started, I had 3 collections, but to them, I had 9 negatives. And I had that 1 late payment. Well, now I'm down to 1 late payment and just one medical bill. So and I'm still paying them. I'm going to give them 6 months and just hope they get it off there.
Right. Okay. So that's pretty good. Lexington Law, they did a pretty good job as far as doing your credit repair and getting 2 items deleted off your credit report. Now, I heard you said you started with the Discover It secured credit card and the Citi secured credit card. Did you have like a few other credit cards that you started with also?
Yeah, I went out and after I had those for a month. I went and got the I kind of looked at it as like, this card's not good, but I'm paying for a trade line on all 3 credit reports. I learned enough from watching you and other guys to know if I get a credit card, I want to make sure it reports to all 3 credit bureaus.
Right.
So I went out and I got the Merrick Bank Visa.
Okay.
Started me out at $550.
The
annual fee was like $159 or something like that. So I told my wife, I said, I'm kind of paying $159 for a trade line because I'm not going to use it. Ever since I've got the card, I turned around and paid it off as soon as I got it. I've used it once in 3 months. I've bought like a can of pop on it. That's about it. I don't use it. I've had it since the end of June.
Okay.
So I can't say if it's a good card or a bad card because I don't use it enough. I basically just got it for the trade line.
Right. Is that the Merrick Bank credit card where they double your credit limit after a few payments?
Yes.
Oh. But did they actually double your credit limit?
They haven't yet. It's only been 3 months. So, yeah, I think they're supposed to look at a review in 6 months.
Right. Oh, okay. Well, that's awesome, man. You started, building credit with, some 3 credit cards, and That's good because it really doesn't take much to start building credit.
Right.
Did you have any other credit cards that you were using at the time you got approved for the mortgage?
I went crazy, man. All in June. I said, if I'm going to do this, I'm going to get all these inquiries and do everything all at once.
Right.
You know what I'm saying? So I went ahead and
Right.
got self lender, which is now self.
Okay.
That way I'd have another installment loan.
Right.
So I've had them since I got them on June 1st.
Okay.
So I've been with them for a while now. Was it June, July, August? Been with them 5 months.
Right.
So that was another installment loan. So now you're looking
Right.
at 3 credit cards and 2 installment loans.
Okay. Did you also have? I know we had a conversation before, and you talked about Navy Federal. Did you have
Yep.
a card from them?
I kept hearing everybody talk about Navy Federal. So I'm
Right.
like, I'm gonna try to get in there.
Uh-huh.
Well, my dad was a veteran, so I went
Okay.
ahead and gave him a call, and I opened up a savings account
Okay.
and set up $50 to go in there every Friday on my savings account. The day you open up an account there, you can apply for a credit card. Okay.
Right. Okay.
And I was still monitoring my score and stuff. So I waited a little bit. And once I became a member, I got my wife in there. Well, my wife she didn't have bad credit, but she didn't have credit. She didn't have anything except a care credit card, which is
Right.
like for dentists, and so it's a Synchrony bank card. Her score was like 630 or something like that.
Okay.
So, but it was clean. She had a real clean report. She had nothing on there, and her payment history was excellent. So I got her in Navy, and the same day she got in there, I had her apply for a credit card, and she got approved for $1,000 right off the bat.
Wow.
So I had her the same day add me as an authorized user, which hurt my credit age, but it gave me another trade line.
Right.
But at this time, I didn't care about my credit age. I wanted them revolving accounts on there.
So did you get the American Express from Navy Federal?
Yeah. Yep. I'm still an authorized user on her account, which was in June. Just this last month, I applied for my own card, the Navy Federal Express, and got approved for $5,000.
Oh, wow.
So yeah, I got another $5,000 credit card through them. So what's neat about them is they have their own scoring system. They pull your TransUnion, but they also go off their own scoring model. It's like from 100 to 450 is what they grade you on. And of course,
Are you talking about Navy Federal?
Yeah. Yep.
Okay.
Yeah.
Right,
and the higher they grade you, of course, the more money you're going to get, obviously. And the letter I got back in the mail, I graded out at like a 301 with them, and my wife was at a 355. So I'm going to keep this card and let it grow in the garden, man, for a couple years.
Yeah, that sounds like
I'm done on credit cards, man. I've got Discover It, City. I got my Navy, my wife's Navy. So right there's 4 credit cards.
Right.
I had her add me as an authorized user on another one of her Discover cards. So that's 5. So I've got 5 credit cards, and I've got a Lowe's card. And I've got 2 more store cards. I can't think of them right now off the top of my head. But I've got 8 total revolving accounts.
Wow,
I can actually pull it up right here and look. That way I can.
All right, that's awesome. And you did all of that in 4 months, right?
4 months.
Wow.
Now, like I said, that might not work for a lot of people. A lot of
Right.
people might have different strategy and want to wait longer.
Mm-hmm.
But at the time for me, I kind of had a little bit of good going for me because I didn't have any credit. I had nothing. So once
Right.
all them revolving accounts started hitting, man, my score just went up, 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 and up.
Right.
But the key to these revolving accounts, and I feel like this is where a lot of people mess up, is you gotta use these credit cards. Don't use these cards and go out and just get whatever you want. These cards are tools to build your credit. They're not for
Right.
going out and buying TVs. And you got to keep, my strategy is, and this might not work for everybody, but it works for me. I keep my utilization between 1% and 3%. That's
Okay.
it.
Right. That's awesome. And that's the way to do it, because, as far as utilization is concerned, the lower your utilization, the better it is, for your credit score too, also as well. So that's awesome. I mean, you had the Discover It, the City Secured, the Navy Federal, American Express card, and the Merrick Bank card, and you had the self lender. And did you still have an auto loan at that time also?
Yeah. Yep. Still got the auto loan. Yep.
So you had a pretty good credit mix,
Yeah.
at that time.
Yep.
And then you had the Navy Federal American Express card that had at least a $5,000 limit. So
Right.
that was a pretty decent limit that you had. You kept your utilization low, 100% payment history too. So all of those things helped you out too. What did your lender ask of you in the application, during the application process?
Honestly, it was a lot easier than what people make it out to be. A lot of people, like me myself, I was intimidated and scared, thinking I'm just going to have to rent my whole life. I didn't get a fair shake on life. I can't buy a house, and that's not the case, man.
Right.
Anybody, if you got a job, you deserve to be a homeowner. You deserve to buy a house for you and your family. By golly, go out and do it. Work for it.
Right.
And I just woke up one day and said, I promised my wife the day I married her that I was going to buy her dream home one day. And we was married 16 years before I did. And I felt like crap for waiting that long because I never tried, because I thought I had bad credit, because my parents or no one ever taught me about credit. So,
right.
But they didn't really ask a whole lot. Once we went in and I was approved within 45 minutes. Me and my wife went in, got the approval letter. The approval letter, I was approved for $350,000, which where I live at, I live in Ohio. That's a lot of house where I'm from.
Yeah.
I don't know where you guys are from, but that's a lot of house where I'm from. Of course, I didn't use that much, but we got the letter, and she basically said, "Go find your house." And I already knew the house I wanted. It was right in the same town where we lived, so that didn't take long. I was in a contract. I got the approval letter on a Thursday, and I was in a contract by Monday morning.
Oh, wow.
Yeah.
That's not too long. So did that Thursday, was that the same day you put in the application?
Yep. Done the application Thursday, got the pre-approval letter Thursday, was in a contract by Monday.
Wow. That's really awesome. That was a very smooth process there, Okay, so that's pretty good experience for you. Now I wanted to ask you, how often do you check your credit scores?
I'm addicted, man. Which I don't know why, because I've got 2 payments on my vehicle, and that's done. I've got all the credit cards I need. I'm looking on here right now. I got 8 revolving accounts. I've got 4 installment loans, 11 open accounts. So I don't need nothing else.
Right.
So I actually I'm more obsessed with my wife's right now than mine because she's so close to getting to 800. She just needs. I'm waiting on another one. I just got her another credit card. I'm waiting on it to hit her report just to see what it does. And I don't know why. Yeah. It's just a passion of mine. I want to get her to 800, which she's close. She's real close. So once this other card hits, I'm going to wait and see what it does. And I might get her a self-lender or something to give her an installment loan. But I'm still waiting on this. This mortgage ain't hit my credit yet. So I'm waiting on it to see what it does.
Oh, okay.
Because when I go on my Experian app to look, my real estate still shows a 0, that nothing's on there yet. So I'm still waiting on it to report.
Oh, okay. All right. That's awesome. Awesome. A lot of people, I remember, I know this is like something different, totally different, but I remember when I used to go to a gym, I had a personal trainer and he told me, don't check your weight, every day. Don't check your weight so often. Check it like once a month, because it would just get you over anxious and you really, don't see accurate results till after at least 1 month. But now that I check my credit scores, it's like I check mine, very frequently, sort of like you do. I check mine a lot too. And it's kind of a different situation now with checking my credit score than it was when I was going to the gym because, when I check my credit scores, I can see what's working for my scores and what's not working for my scores. And if my score goes up, I can look into my credit file and I can see what is it that I did to, make that happen. You experienced that too also?
Yeah. Yeah. And from what I've learned, I'm by far not a professional. I'm 39 years old, married with 4 kids. I'm just telling you from experience what I've learned on my own and what works for me. As soon as my feet hit the floor in the morning, man, I'm pulling up my Experian app because I know in my head what cards are due when they report, what balance it's going to report, and what that's going to do to my score. I know that every day on me and my wife. And I check just to see what does what. And now since I bought this house and I'm still obsessed with it because I ain't concerned about driving that score up. I've kind of played around with some of my credit cards just to see how big the utilization actually is. And I did it on purpose. My Discover card, that's $200. I let it report last month for the first time ever over 12%. I kept up like a $26 balance on it or something like that. And it raised my usage up and it knocked me down 7 points. You believe that?
Ooh-wee, wow.
Yeah, yep. And I just did that on purpose just to play with it and see how big these credit card companies look at this utilization. And one thing I think I've learned from all this is these credit card companies, they don't want to give high credit limits to people that use them, if that makes sense. They want to give high credit limits to people they know they can trust and it's not going to use them. Does that make sense to you? Like, from what I can tell, they're more willing to if somebody's got $1,000 credit card, and yeah, they make all their payments on time, but their balance is $700, I feel like they're not going to increase their limit as opposed to someone who's got $1,000 credit card and only has a balance of $30. I feel like they're more willing to extend credit to people with lower balances that manage their credit better.
Yeah, I mean, it depends on the lender. A lot of lenders can extend, credit increases to, people who, like, say, may have maxed out the card or near maxed out the card during that cycle, but they ended up paying it off before the statement closing date. And when a lot of those lenders see that in their account, they're more, likely to extend to them a credit limit increase because they're saying, well, that person needs more credit. They're paying the card off every month, so they're not carrying a balance or much of a balance. So a lot of people have been successful getting credit limit increases that way. So I've been told. As far as people who carry low balances, definitely. I mean, those increases, they will happen. If you keep your balances low and, don't go in over the red zone, which is 30% is the red zone pretty much.
Right.
Anything above that is going to have a huge effect on the credit score in a negative range. But what I wanted to ask you also is, what about authorized users? You talked about some authorized users that you and your wife had. Did your lender look at authorized users on your credit report?
Nope. Kicked them out. She said they don't look at authorized users are good for someone that's wanting to build your credit quick.
Right.
If you're wanting to jump your score up. But she told me, like where I had my wife on as an authorized user and she had me on, it didn't lower our score, nothing. They still went off our score, but they just kicked them accounts out. They didn't even look at them like we didn't even have them. If that makes sense. Yeah. Yep. Because she said that they don't use them. They want you to use your own credit and establish your own credit instead of piggybacking off somebody, if that makes sense.
Yeah, it does. Well, that's very interesting. They don't use authorized users, but they still will use the credit score that you have, right?
Right. Yep. She still used my credit score that I had, which obviously could have went up from the authorized user I had for a few months. But when they looked at my report, they didn't count those accounts on my wife's and my credit report. It was like they didn't even exist.
Wow. Oh, okay. Well, that's interesting. Okay. Let's see. So, being that we're talking about like credit scores too, what did you ask your lender what score that they used before you applied?
All they would tell me is they use, I got it right here. I'm trying to find it. All they could tell me is they use an older FICO version. But what I found ironic, in which it could have totally been a coincidence, the Experian FICO app that I use, if you click on Experian to see your score, and it shows the additional FICO scores down below it. The first one there, the FICO score 2, was the same score as what my lender pulled on me and my wife's. So coincidence, I don't know. But if you click on that, it says this is an older FICO score version used primarily in mortgage lending It may also be used by some lenders for other credit product application evaluation. So I don't know if it was a coincidence or what, but it was right on the money.
Wow, that's awesome. So you pretty much were well prepared then when you went in to do the application because you knew what score they were looking at, and they actually used the same score, right?
Right. Yeah. Yep. So that was
Okay.
once I got approved and everything. Once we picked out the house and all that and got everything, the toughest part I'd say through all this is once it gets in the underwriting process, once the bank send it in the underwriting and they comb through your bank accounts, and we wasn't allowed for about 25 days. My wife and I couldn't take no money out of our account. We couldn't deposit more than like $200 without calling them and telling them what was going on.
Okay.
Underwriting was really, really, really strict about what was going in and out of our bank accounts. They just really monitored and dug through everything with a fine-tooth comb, man. I tell you, it was pretty nerve-wracking.
Wow, I could imagine. A lot of people had told me the same thing that, for a lot of, items. Did they ask you for like a lot of documents?
Actually, man, I think mine was real smooth because where I've been at the same job for so long. Let's see, what is this? I've been at my job since 2006. With no break in my employment or anything. So, I mean, it was pretty easy for me. My wife's had a couple jobs, but the same line of work. So it was pretty smooth. I mean, we got them our pay stubs, we got them our tax returns. And honestly, we never heard from them until they needed something, which is maybe like once a week. Hey, we need this. Can you go get something from your bank showing why you got $300 out or something like that? And I'd go get it and run it up to them, and that was the end of it. The toughest part was, like I said, when they sent it to underwriting, waiting on it to come back because they're so strict. They just they'll find anything and call you out on it. I had to me and my wife had to sign a form. It was like a revolving accounts form to prove that all the credit cards on our report was ours and that we just use them for, I don't know, whatever, gas, groceries, or whatever. Yeah, we had to do that. And other than that, it was a pretty smooth process, man. I think a lot of people are scared and nervous about, one, getting approved, and two, the interest rate. Waiting on, oh, I want to get a 3% interest rate, or I want to get a 4% interest rate. I got a pretty good interest rate. Yeah, I could have got lower if I'd have waited longer, but I'm type person, man. I live in the now. Why wait? Do it now.
Right.
You know?
Right. Okay. And I heard you said you got a good deal. So what type of deal did they give you on the house?
We did a 30-year. I wanted to do a USDA, but we couldn't. The area I live in, we couldn't do a USDA. And I didn't want to do a conventional because I didn't want to come up with $20,000 down. You got to pay all that PMI, man. So I went ahead and done the FHA, which is 3.5% down. I got a pretty good interest rate. I got a 4.125 rate or something like that, which, I mean,
wow,
first time home buyer with recent credit. I mean, if you look at my credit report, you can tell all my credits from June to August. So I couldn't complain. Yeah, I could have waited. I could have waited and kept all my credit cards at 1 to 3% and waited another year. and got it below 3. But my wife wanted the house that we're in, so I said, let's do it.
Right. That's really awesome. And I know they also, besides looking at your credit scores to determine what interest rate that they give you, they also look at like how much debt you have, like a debt to income. They call it a debt to income ratio.
Yeah.
How did they look at your debts? Like, how did they consider you?
That was a home run for me. That was a slam dunk. I didn't have any debts, like I told you. I had nothing. I didn't know. I just had my car and then them recent credit cards. That was it. So with me and my wife's income, it was a slam dunk as far as debt to income ratio. That's why they approved us for so much house, because they knew we could pay for it. But obviously,
and you didn't have that many, and you didn't have that much debt either.
No, I had no debt, just my car. That's it.
So you had a pretty good debt to income ratio there.
Yeah. Yep. If there's one thing I would recommend to anybody out there that's getting ready to buy a house, get your debt to income under control before you go, because where mine was so low, like I said, I just had that car at $500 a month, and then normal bills. So I think that's what made this loan so easy, honestly, because they knew we could pay for it. We didn't have any other debts.
Right. That's awesome. So basically, I know you said you didn't want to go with a conventional loan, because then you would have had to put like $20,000 down.
Right. Yeah.
Did you have to put any money down to get this house?
Yeah. Where I think it's nationwide this way. I'm not sure. I haven't researched it, but FHA here in Ohio, whatever you finance, you got to have 3.5%. So I financed right at 200,000, so we had to have 3.5% of that. So, and then another thing I would recommend for anyone that's getting ready to buy is, whatever type of loan you're going to do, just from personal experience, this might not work for you, but it works for me. If I was ever going to buy a house again, which I'm not, but if I knew now, I would have saved, like, not counting my down payment, I would have saved an extra like $3,000 just to have for stuff that you don't even think about. Appraisals, inspections. There's all kinds of stuff that's going to pop up where you're going to have to throw out $300 there, $300 there. An appraisal was $750. A home inspection was $350. There's so much stuff that pops up where you got to throw money that, I had to dip into my 401k to get some extra money to cover stuff that I didn't even think about. You know what I mean?
Right.
Now. So, because I didn't want to put, during this time, we wasn't allowed to use our credit cards for anything. So I wasn't going to put an $850 appraisal on a credit card and kick the deal. You know what I mean?
Right.
So
I hear you. So you said if you had to do it all over again, you would have saved up some extra money to cover like appraisals, inspections, and things like that.
Yep.
Did you have to like also pay for mortgage insurance out of your pocket, or you did?
Yeah, the state I live in, for an FHA loan. Thanks for bringing that up, Lyndon. I forgot about that. The first year, you got to pay for your first year of mortgage insurance up front, which is like $1,300. So right there, between mortgage insurance, an appraisal, an inspection, you're at $2,500 that I didn't even think about, because I wasn't educated on it. I didn't know I was going to need $2,500 for this stuff. So me and my wife, trying to come up with this money. Luckily, we both got good jobs, and was able to move some money around. And, this was all going so fast, was able to come up with it real quick.
Right. That's awesome. So I heard you said you were on the same job since 2006, and your wife was also has a long employment history in the same field.
Yep.
So basically, is job stability like a huge factor when applying for a mortgage?
She told me it was. What they do is it's kind of like a pie chart, where they give you a certain percentage for job history and stuff like that. And, where I'd been at my job for so long with no breaks in my employment and stuff like that, I got the max amount of points for that. So I think that, and I think my job history, and see, because not having a real strong score, I wasn't at no 700,
Right.
I think my score, if I remember right, that she pulled, which matched my FICO 2 on my Experian app, was 682, and hers was like 688 or something like that. In the ballpark. You still there?
Yeah, I can hear you loud and clear.
Okay. I thought I lost you for a second there.
No, you're fine.
Okay.
Yeah, you were talking about how you had a 682 credit score and your wife had a 688 credit score.
Right.
And you were talking about is job stability, like being on the same job for a long time.
Right.
Is that
huge
for them? Said they had a percentage
that
they go by.
Yeah, she told me a lot of people worry so much about their score and don't really realize that a lot of what goes into the home loan is what's in their report and not about their score, if that makes sense.
Yeah.
Your report and history means more in a mortgage loan, in my experience, than your score does. If that makes sense.
Yes, it does.
I thought one of the comments here, Curtis Davis, had a good comment. He says quality over score, and he's right.
Oh, okay. Quality over score. So basically, yeah, I kind of agree with that because, a lot of people are really hung up on credit scores. And what they don't realize is that a lot of lenders, not only mortgage lenders, they also look at, credit profile, like what you actually have on your credit report too. So, I mean, that's huge, Credit scores are great because they help you get the best interest rates.
Right.
Yep. You get the lowest payments. You might end up getting the best deals. But to actually get approved, they're going to be looking at your credit profile, like what's on your credit report. And that's the same as like when you applied for the mortgage. They looked at what was on your credit report more than only your score, right?
Right. Yep.
Okay. Awesome. All right. So, in your opinion, like what things helped you the most to get approved for the mortgage? What main factors like were in your favor the most and helped you get approved?
I say that the two things that help me more than anything is job history, number one, and my debt to income ratio. I think those two right there, from what I was told, is what got the deal done. Yeah, I mean my score wasn't bad, but I think the job history and What else was it? I can't remember what I said.
Yeah, credit score, I think. Maybe.
Job history and I can't remember what it was. I lost my train of thought.
I know it happens. Happens to me all the time. But I mean, the job history is huge. Oh, debt to income ratio, maybe.
There you go. Yep, that's what it is. Yep.
Yeah, I mean, that's huge. Debt to income ratio is huge when you're applying for a home loan because they want to make sure. I mean, credit scores are great. What your a credit profile is good too. It all helps. But if someone cannot afford to pay for this house,
right,
or if they have too many debts to where there's no way they'll be able to make payments on this house.
Right.
Why would a lender approve somebody like that? You know what I mean?
You just refreshed my memory. She was telling me a story of a couple that came in to buy a house, and the guy had like a 775 credit score, and his wife was like 740, but his wife didn't work, and he was disabled and only got Social Security, which I think it was only like $1,500 a month, and they didn't approve him. They didn't
approve him.
He couldn't get financed for it because he couldn't pay for it. Like she told me, she said, yeah, they could have both had 800 scores, but the bank wants to see where's the money going to come from to pay this. If you don't have the money coming in to pay for it, then why are we going to loan you $100,000 to buy this house? And I thought that just blew my mind because I always thought, oh, credit scores, that's the big thing. But
credit scores are, like I said, credit scores are just their main function. I believe a credit score is to get you the low interest rate.
Right. Yep.
As far as credit cards are concerned, however, the score can actually get the lender or that bank to actually start looking more into your application, considering you for approval, because some credit cards, you need to be in a certain credit score range in order to get approved for them. But even they look at other things besides the score to also as well. And I can imagine, the mortgage lender, with them, you had a great DTI because you didn't have too many debts, and you had a great job history between you and your wife too also. So that was like probably the biggest thing going in your favor when you were applying, right?
Yeah. Yep.
Okay, awesome. So, after all you said, which is some great information, I really appreciate you coming on here to share this, with our subscribers and our viewers here tonight. One last question I'm going to ask you, Jason, and then we'll go ahead and jump right into the comment section and see if we have any questions there that we can go over, or comments too. So based on everything you experienced, getting approved for your first home, how do you feel about this? Should someone be nervous or scared to apply for a mortgage?
Well, if they haven't been at their job a long time, and if they don't monitor their credit, and if they don't know what their score is and what's in their report, I would wait until you're educated enough and learn like I did and know what's expected and what's in your report and what you need before you do it. I was always under the assumption, for some reason, because I wasn't taught, that I couldn't finance anything and that I had bad credit, even though I was at my job forever. Nobody taught me how to build credit or establish credit. and that you even needed credit. And that's
Right.
something I've got 4 kids, and I'm going to drill it in them about credit, man, because my parents never taught me. I wasn't taught in school, or it's something I learned on the fly. I mean, no one ever showed me. I didn't think you needed it, so I just thought I had bad credit, and I thought I got a bad shake on life, and that was it. I didn't know I could fix it myself. So,
Oh, okay. So that's awesome. I was kind of the same way, when I first started, before I started building credit back in October, I knew nothing about building credit or how to build credit. So I learned what I know from experience and learning from watching other, YouTube channels that talk about credit, reading a lot on Reddit and my FICO
yep.
forum.
Mm-hmm.
I read a few books too about how to build credit, too, also as well. So I mean, that was my experience. I just jumped in the water, and I had no choice but to learn how to
Right.
swim. I was already in the water. You know what
Yep.
I'm saying?
Yep. Yep.
It's just a matter of, am I going to swim or am I
Right.
going to drown? Am I going to drown?
Yep. If anybody's getting ready to buy the house, what I would recommend to them is monitor your credit, save money, save your money, and pay off whatever you can pay off. But if you're in a pinch, kind of like I was, and you're tired of renting and there's a house you want, go for it. I mean, what are you waiting on? If your credit's good enough to where you can get approved, then do it.
Right.
Yeah, your interest rate's going to be high. Get in the house, pay the bank for a year, show them you're worth it and that you deserve it, and refinance the son of a gun. Don't think you're not good enough to buy a house. You work, you got a family, you got a job. You deserve to own a home, man. Go out and buy one.
Right. Right. Absolutely. So it's not pretty much nothing to be, afraid of, applying, for a mortgage, because, I think the best thing to do is just, pretty much, get everything prepared like you did. You know what I
Right.
mean?
Yeah.
I mean, you had like 4 credit cards, you had an authorized user, or I think 2 authorized users,
Yep.
right?
Yep.
And that helped jump your score up.
Sure did.
And the,
Yep.
the credit cards that you added onto your profile, that jumped your score up too, also as well, because before that you only had an auto loan.
Right.
So after everything was said and done, you had 2 installment loans, then you had 4 credit cards and 2 authorized users.
Yep.
So you had a great credit mix. You had a good credit score too, also as well, and you ended up getting a good deal, 4.125%. So that's pretty much awesome there. Let me see. I think we're getting into the comments and the questions now, people. Just to let you guys know. So I'm gonna start with Curtis Davis's question. That's for you, Jason. Curtis says, "Was your utilization down to 10%?"
When I got approved, my before I got the house, before I went in and applied, I made sure all of my cards and all my wife's, between us both, was probably about 12 cards, was all under 3% on both of our reports. The day I
Okay.
went in and applied, like I said, I refreshed my I went ahead and paid for it, because you know how it updates every 30 days, your experience. Well, I went ahead and paid for it that day, refreshed it, saw my scores, checked out my wife's scores, because I knew all of our cards was hitting. I knew the day the due date was. I knew when they reported. I knew the balance it was going to show. I knew they was all going to be at 3%. It's all a game, man. It's all
Right.
It's all figuring out the FICO algorithm, what they want and what they want to see. That's all it is. So I made sure all of our cards was 3% and under. Everything was in good standing, and I just did it. I went and I knew everything was showing good that day. All of our cards was under 3%. Most of mine was $3 and $4. Most of hers was $0. We had no debt, just my car. So, yeah, that's that.
Okay, awesome. First, I want to recognize everyone. Please say hello to Curtis Davis, and who thank you so much for the question. And Curtis also had a comment and said, Experian has a mortgage score and an auto score too also. And I also want to recognize Cakeology. Bob, he has his own YouTube channel where he talks about how to build business credit. So for all of you who are interested in that, go over to Cakeology's channel and subscribe and hit the bell for notifications so you won't miss any great content that he makes about business credit too. Welcome to the chat, Cakeology. I'm glad you're here with us, and thank you so much for joining too also as well. Now, Bob from Cakeology, he also had a question for you, Jason. It's about the Merrick Bank credit card. I don't know. Can you see that on the screen, Jason?
Yeah. Can anyone apply for the Merrick Bank credit card? I think so. I did. I got on the website, and I think there's a pre-qualify for it, if I'm not mistaken. I've gotten so many credit cards past 4 months, I can't remember. Yeah, you can go on their website. There's two different cards. There's a secured card and this card here that doubles. And I just done the pre-approval or the pre-qualify for $550. And like I told you earlier, I was buying the trade line. I didn't care about the card. I didn't care about the interest rate. I wanted the trade line on all three of my reports because I knew I was getting the points and I was in a hurry to get this going. So I knew I was paying for that annual fee. I knew what was it, I think it was $170 some right off the bat. I'm in the hole on the card. So right there, my utilization's all out of whack right when I get the card. So I'm paying $170 basically for a trade line. But to me, it was worth it because it's on all three of my reports. I use it maybe, I don't know, once every other month for a can of pop or something just to keep it active. So, and it should be doubling here soon. I'm about to hit 6 months on it, so.
Wow, that's awesome. That they double your line after 6 months. That's pretty great. That's pretty great. So let's see. Curtis Davis also had a comment here. He said, excellent strategy. You understood you needed a better trade line.
Right. Yep.
Okay, awesome. Janelle said, Jason is on the right path to get where he needs to be. Very proud of him for doing that. Thank you for that comment, Janelle. Curtis says, wow, great results. And Cakeology says, at how to get an 800 credit score, looking like a young tech YouTuber. Love it. Oh, okay. Well, thank you, Bob. They're just some old headphones that I got, nothing major. But we do have a comment. Actually, we have a question from Facebook, coming from Facebook, because I'm not sure if I mentioned this at the beginning of the stream, but this live stream is broadcast on 13 Facebook groups and pages combined. All combined is 13. So we're on 13 different platforms, including in that is Periscope, which is Twitter. Most of you know. Pages combined. And we didn't get into LinkedIn, but there's 13 platforms on together. So the question we have from Facebook is coming from Shanika Thompson. Shanika Thompson says, "What does the score have to be?" So I guess Jason, she's asking you like, what does your credit score have to be to get approved for a mortgage, I guess, or
Right.
FHA? I guess 'cause you applied for FHA, right?
Right. Yeah, I was told. I'm not sure if it varies state to state, but where I'm at in Ohio, I was told they would take you for an FHA with as low as a 580 FICO with
Uh huh.
3.5% down. So, like I said, you'd have to look it up in whatever state you're in, but I know where I'm at. You can get financed for an FHA with as low as a 580 FICO score. Now, your interest rate's going to be through the roof, I'm sure.
Mhm.
But I mean, if that's the position you're in and you got a chance to get one, like I said earlier, what are you waiting on?
Right,
I mean,
absolutely. I mean, that's just like building credit. Building
right,
credit. Like, what are you waiting on? You know what I mean? I mean, yeah, you may not be able to get approved for like a Chase Sapphire Reserve or the best credit card travel rewards card out there right now, but go ahead and open a secured card. You know,
right, yeah, yep,
it helps. It helps, and that will get you in a better position so that later on down the line you can get some of the best credit cards out there. You know what I mean? But you got to start somewhere, and the best thing to do is to start now.
yep,
Start building credit now. It doesn't
yeah,
matter if you have a credit repair company working on fixing your credit for you or deleting, all the negatives off your report. You need to start building credit now, because by the time they're done fixing everything on your credit report, I mean, if it takes 6 months for them to do it, or if it takes them a year to do it, by that time you have 6 months to a year of credit history.
right.
See, and that makes a huge difference.
Well,
To
a
also,
lot of people from coming from my experience, because this was the way I was once I bought my vehicle a few years ago. I
Mhm.
was I kind of once I thought I was told at the dealership that I have bad credit,
Uh-huh.
I, I was scared of it. I didn't because I didn't know anything about it. I didn't want to look at it. I didn't want to deal with it. It was out of sight, out of mind because I didn't know I could fix it.
Right.
No one taught me anything. So I just thought,
Hmm.
oh man, this sucks. I'm going to go my whole life with bad credit. I just didn't deal with it. I didn't pull up Credit Karma. I didn't do anything because I was scared.
Right.
I didn't want to
Hmm.
look at it. And that's the first thing you got to do, man. You got to look
Hmm.
yourself in the mirror and you got to be like, man, I want to fix this
Right.
because you've done it. You got to face the fact, man. You've done it yourself. So fix it.
Hmm.
You,
Right.
you put your own self in that situation. I did.
Hmm.
So get yourself out of it, man. You can do it. Learn how to and do it. I
Right.
started June the 1st. My score June the 1st. Uh, my FICO score on June 1st was 578. I just pulled my FICO score up here, my real FICO, and it's 699. So,
Wow, that's awesome.
I mean, right there it is. Nobody believes me. I don't know if you can see it or not, but
Yeah, 699. That's great, and that puts you in the good credit category right there.
right.
Um, you can qualify for a lot of different things. Different credit cards, maybe rewards credit cards, cashback credit cards, maybe some travel credit cards. So that's awesome. That you went from a 578 up to a 699 FICO score. That's so. Everyone, please say congratulations to Jason Vanhoose for that too. Also, and let's see, did I miss any? Okay, that's the comment that I wanted to display from Curtis Davis. He said, "Awesome job to you, Jason." And also Bob from Cakeology, he had a question for you, Jason. I guess, yeah, that is a question. He says, "Do you have any tricks to paying off your 30-year mortgage in 5 to 10 years?"
Not really. Everything I've learned is what I'm doing is I'm paying my payment every 2 weeks instead of once a month.
Right.
Because the lady told me that it'd save me thousands in interest if I do it that way. So
Mhm.
I got a hold of the lender and I let them know my due date is a certain day, which they take it right out of my bank account, but I'm just paying every 2 weeks. Half of what it
Right.
is 2 weeks, the other half 2 weeks to knock that off.
Mhm.
Because she'd told me that'd save me a lot of money in interest. So that's what I'm doing. I don't know if that works, but we'll find out.
Awesome. Awesome. All right. Curtis Davis also had a comment here. He says, I always tell my client never use the card first month, maybe $5 to use to see the boost. I guess he's talking about like credit card utilization and keeping your balance low on the credit
Right.
card, Jason.
Right. Yeah. I've learned one thing I've learned, and like I said, since I bought this house, I've been able to play around with my credit cards more because I care, but I haven't cared as much because I'm not getting anything anytime. So I've been toying around with them. And from what
Uh-huh.
I can tell, credit card companies, they want to see you use your cards every month.
Mm-hmm.
They want to see you pay a little bit of interest, but they don't want to see you use them too much, if that
Right.
makes sense. So
Yeah.
the strategy I'm kind of taking on me and my wife's cards is I just got her a card for $500. Okay.
Mm-hmm.
So we're going to sock drawer it. We're going to put it up. I told her you're not
Mm-hmm.
going to use it. It's just a trade line. You're not going to keep it on you. We're going to set it up for Netflix.
Uh-huh.
$15 a month. Set it up on auto pay. $15 hits Netflix. Pay it off. Auto pay every month. And I'm going to see how
Right.
that works out doing it that way.
Okay. Awesome. Awesome. Alrighty, Janelle had a comment. She said, that's just awesome how Jason was able to do this within 4 months, get a mortgage to get a house. He is an example of how all this works and what he and his wife have done. I guess she's saying 100% awesome. So Janelle had said that. And Curtis Davis also said, nice home approval. Thank you for that comment there, Curtis. And Kevin Jackson, everyone, please give a warm welcome to Kevin Jackson and the Cream Team to the chat, too. He says, hey, Lyndon and Janelle and family. Cream Team is in the house. How are we this evening? Fine, I hope. Cornell is also in the building. Cornell, Mr. Mentor Freeman says, hello, everyone. So everyone, please say hello to Kevin Jackson and Cornell, Mr. Mentor Freeman, too. Curtis Davis had a comment concerning like what you had said about that you check your credit score frequently, Jason. And he said, me too. I monitor my score every morning. Do not leave home without credit karma check.
Right. I get up every morning, even after buying my house. This is weird.
Mm-hmm.
As soon as my feet hit the floor, I check my Experian app
Okay.
because the Experian updates every day, but the TransUnion and Equifax only updates once a month.
Right.
Well, there's a trick to that. I use Wallet Hub and Credit Karma. I use Wallet Hub for my TransUnion, and I
Mm-hmm.
use Credit Karma for my Equifax.
Right.
Well, every Tuesday, I know I'm getting an updated Equifax and TransUnion on Credit Karma. And every day, I know I'm getting an updated one on Wallet Hub. So every day, I'm waking up to my scores. You know what I mean? Seeing what's
Right.
updating. Even though the Vantage scores ain't 100% accurate, well, what's on my report is my score might not be right on Vantage, which it's not. Like I just pulled my Vantage up on Credit Karma, and it's at 720, and I know my score is not that high. Them Vantage scores are
Okay.
crazy, man.
Yeah, and that's the thing, you know, Vantage scores are a totally different scoring system. Vantage is a company that they produce and calculate credit scores just like FICO does, but they do it in a different way than FICO does that. And for everybody who wants to find out more information about that, how your Vantage score may be different than your FICO score, and the reason for that, we do have a video here on this channel. The title of the video is called "Why Your FICO Scores Are Different Than Your Vantage Scores." You can definitely look that up here on this channel too. Also, so let's see if we have another comment. Janelle says, I do the same thing. Every morning I wake up, always check my credit score. I've been having a habit of doing that since April. And Curtis Davis says, right, what's working? Christopher Hopkins. Everyone, please welcome Christopher Hopkins to the live stream. Thank you for joining, Christopher. Christopher says, credit is king. Well, how do you feel about that, Jason? Do you feel that credit is king?
I gotta agree with him, man. I think credit's the new. I think money's going to be a thing of the past, man. I know everybody's all into this Dave Ramsey pay cash for everything, but the way the world's set up, man, if you don't have credit, you don't have nothing.
Yeah, that's
It's
very
simple.
true. I agree with that. Yeah, I agree with that 100%. You know, if you don't have credit, I mean, it makes it very hard for you in many different ways. You know, not only like your living situations, like getting approved for like an apartment. You know, you could get so much better deals on apartments if you have good credit. You know, and living without good credit is very costly, very expensive. You know, it's very expensive to live without having good credit, and you're missing out too by not having good credit on a lot of things, a lot of benefits, rewards. You know, you talk about like buying things. Can you imagine, you know, buying something in the store and getting some money back every time you buy something? You know, or buying something in the store and some company is uh, adding points, and saving them up for you so that, you know, a few months later you can fly from here to Japan for free.
Right. Yeah.
Now, can a debit card do that?
Right.
You know, can cash do that? I've never seen any cash do that. I haven't seen a money order do that. Right. I haven't seen a debit card do that either. But I've seen many credit cards do that for people.
Right.
So, you know, having credit is I believe it's very important in this day and age. And I totally disagree with Dave Ramsey. I mean, some of the things like he teaches about how to eliminate debt, I can somewhat agree with a lot of that. You know, the method of how to eliminate the debt, where he talks about, you know, the snowball method and everything. That part I can agree with. But his opinions on credit, I don't agree with at all. Let's see. Curtis Davis had another comment. He said he uses Experian also. And Curtis said, discipline with card, your score. I think, Jason, you had answered that already. You said your score was 578 when you started out building credit, right?
Yep.
Okay. Awesome. Curtis Davis also says 7 to 10% utilization, sweet spot. Okay. Thank you for sharing that, Curtis. Curtis also says he pays his card 2 times a month. That's, you know, paying your card 2 times a month is good. Okay. Anything more than once a month is awesome, because if you only have like 1 or 2 credit cards or 3 credit cards, it may be easy to, it may seem easy to keep track of all these due dates and the statement closing dates because it's only 2 or 3, right? But when you start getting into like 6, 7, 8, 10 credit cards, things can get a little complicated for you. So it is a lot easier to pay these credit cards off more than once a month. Once a week is great. To also, like, if you can pick a day out of the week when you have time to sit down and pay down your credit cards, that's really great. Because if you miss a week, like say if you do it on a Sunday, like Sunday's your day off, you have more time to do it. You and your significant other, spouse, you sit down and figure out what you owe on all your credit cards and your accounts, and pay them off. Say if you miss one Sunday in the month, it's not going to hurt you really that much because you already made 3 payments during the month already. You see what I'm saying? So it's always good to pay your cards off more than once a month. So good comment there, Curtis. How do you feel about that, Jason?
Yeah, I another thing is I feel like where a lot of people mess up is if your due date, this is another example where you got to monitor your credit and deep dive into your revolving accounts on your report and see when these credit card companies update their balance every month, because they update them the same date every month. Mine does. All mine's the same date every month. I got the same due date and my balance updates the same on my cards every month. So say if your due date's the 21st, say you got a $200 card and your balance is $50 and you want to get it below 10% before the due date, well, pay that sucker off before the due date, but don't use it again until after it reports. Because if you pay it on the due date down to $10 and you turn around the next day and go buy a new pair of shoes and there's $160 on that bad boy, and they turn around on the 24th and report it to the credit bureaus, well, your utilization's through the roof.
Yep.
There's nothing that happens in those 5 days that's drastic enough to where you cannot wait to use that card. Pay it on the due date, let it report, then use it. Use it as much as you want, but pay it off before the due date and don't use it again until after it reports. And you're good.
Right.
You're good.
Right. Absolutely. I agree with that. If you're going to go by the due date, definitely make sure that you do not spend any other funds on that card before they report to the credit bureau. Okay. Very important, because, like Jason was saying, you may think that you paid it down and your utilization is great, but you got to remember you spent more money after the due date. Okay. So they can calculate that into the report when they report to the credit bureau, and the balance that you think you may have may not be the balance that they actually report to the credit bureau. So that's very important. One way I could think of to avoid that situation is, for one, like Jason was saying, don't make any other spend on that card between the due date and when they report to the credit bureau. Okay. And you can easily find out when they report by looking at your credit report. You don't even have to pay for a credit score to do that. You can go to Credit Karma. That's for free. And they will show you what's on your credit report. And they also show you what date each and every single trade line, credit card, loan, whatever you have on their reports. They show you what date it reports to that credit bureau too also. So you definitely want to make sure that you don't make any spend between those two periods. Also, another thing that can help you out as far as avoiding that is pay your payment a few days before your statement closing date. because what happens on a statement closing date, your creditor is going to like do a snapshot of your account, and whatever your account looks like when they make that snapshot is exactly what they're going to report to the credit bureau.
Yep.
So you want to make sure that you pay your balance down before that statement closing date. So that definitely helps. And besides that, make payments weekly if you have to. Pick a day of the week when you want to pay down your balance, and do that. So if you combine all those three techniques and tricks, that will definitely help you, to avoid that situation. Curtis Davis has another comment. He says, score sometimes determines rates. Um, I think you, I think you talked somewhat about that, right, Jason? Or
Yeah. Yep.
okay, so great, awesome, awesome. And Curtis says, many banks or lenders use FICO 2, FICO 4, and FICO 6 for business lending too. Yeah, a lot of those FICO scores, Curtis, are used for different reasons. You know, FICO 8, FICO 8 is used to also. They say FICO is the most widely used credit score, but you'll find, like you already found out, that some of those FICO scores that you listed here on the screen are used by other types of lenders too. Curtis Davis also had another comment. Says, knowing half the battle, knowledge is power. Okay, definitely. And he had a question for you, Jason. I'll just put that on the screen for you.
Do you need to be on the job for 2 years? I don't necessarily know if you need to be. It's good to be, and it's also good to be to not like what they say is job hop. Uh, you want to, the longer you're at the same employer, or at least the same line of work, and not jumping around to different jobs, the better it looks. At least that's what I was told. Like I said, I've been with the same company since 2006. No break in my employment. I feel like I've been there forever. But I never, like I said, where I wasn't educated on anything, I didn't know that was good until, I started learning all this and went to apply for the mortgage. But I don't say you necessarily need to be for 2 years, but if you're getting ready to buy a house and you got all your ducks in a row and you feel like you're ready, I would might I if I wasn't in the same line of work, if I went from construction to, I don't know, delivering pizzas, I'd probably wait to hit 2 years. But if it's the same line of work, I don't necessarily say you'd have to wait.
Mm-hmm. Okay, awesome, awesome. So that's what really helped you out, Jason, was that you've been on the same job for since 2006, and also your wife has been in the same field
Right.
for
Yep.
a long time. So basically, if someone is not been on the same job for a long time, then they should at least have been working in the same field for a long time, right?
Right. Yeah, I definitely wouldn't. If I hadn't been on a job for a year minimum, I wouldn't recommend trying right now. I'd wait if it's a new job for at least 2 years.
Right. Absolutely. Okay. Awesome. Awesome. And Curtis had another question. He says, did you have to show collateral like a 401k or a down payment?
Yes, that's a good question, man. Uh, I had to show where I got my down payment from, which for me it was pretty easy because, like I said, I've been at the same job forever. So all they did was look at my deposits.
Right.
So that's where the down payment was, and I did have to show them where I got money out of my 401k to help cover
Mm-hmm.
uh, stuff that I didn't even think about: appraisal and closing cost, mortgage insurance for the first year, like I said, right there was $2,500. So I got like
Right.
$3 grand out of my retirement.
Mm-hmm.
So I had to show him the last 3 months, the last quarter of
Uh-huh.
Fidelity, which
Right.
that's where my 401k is, Fidelity. I had to give him a quarterly statement from Fidelity, which it was easy. I just went in and printed it out and got him that, and then just showed him where it got deposited into my checking account. That was it. No big deal.
Oh, okay. Awesome. Awesome. All righty. So let's see here. Roll the tape is on here. Is in the building. Roll the tape. That's Richie Rich. He had a channel. His channel was formerly named Salsa Dominican Republic. And everyone, please say hello to Roll the Tape. He has an awesome YouTube channel, people. I was fortunately a guest on his live stream a few weeks ago. If you have missed that live stream, feel free to catch that. It's here. Actually, I'm not sure. No, we don't have that on the channel, but it's in the community tab. But he has an awesome channel, and he has many guests on the channel, and he talks a lot about things that's going on today, a lot of great topics too. Also, as well, he had a guy that he travels all around the world. His name is Travelmatic. This guy, he's been making some awesome videos. Lately, he made a video in Cuba and another video in Cuba and about a carnival. Some awesome content. So he has guests like that on the channel, people who travel the world. So you could definitely learn a lot about different cultures and places to visit by visiting his channel too also as well. So go ahead and click on his name in the chat, roll the tape, and go to his channel and subscribe and hit the bell notification too also as well. Gary Bluen is here in the building, people. Everyone, please say hello to Gary Bluen. Gary says, thanks. You just answered my questions, loan type and interest rate. Congratulations, Jason. So Gary says, congratulations to you there, Jason. And let's see how many. Okay, Curtis Davis has another comment. He says, many families choke their budgets with too much credit, furniture, etc. Yeah. Okay. Definitely. And Curtis also says, what do you say here? My coworkers advised me never buy too much on credit, but family needs home. Now, Jason, you kind of touched on that too, right? And you said that, well, you and your wife wanted that house. You definitely wanted that house as soon as you saw it, right?
What are you waiting on, man? If you can afford it and you got the credit to do it, you're not going to live forever, man. I live in the now. I don't live in the future. I don't live in the past. I live in the now. I don't know what's going to happen in the past, or I don't know what's going to happen in the future. I can't control the past. I can control what's happening right now. Do it. What are you waiting on?
Right, absolutely. I mean, the best time to start is now. Just like building credit, the best time to start, building credit is now. Janelle had a question for you, Jason. She said, "What's is a great example you want everyone to know doing this and not go down the wrong path?" Is that your question, Janelle? Was that the question that you had? The question I put on the screen?
Example for people.
Oh, okay. Yeah. Jason, I think Janelle is trying to say, what is the example that you want for people to know? What do you want people to know about doing this? Buying a house, basically.
Yeah. That you can do it. A lot of people just think, like I did, that you got a raw deal, you got a bad break on life, and you can't do it. The thing is you can, and you can do it yourself, because I did. You just gotta, it's a grind, man. It's a grind and it's a game. That's Honestly, it is. The FICO algorithm is a game. From my experience, that's all it is. And you got to learn to trick it, and you got to be disciplined. And you got to show them what they want and give them what they want to get them points. And I'm a firm believer in 1 to 3% maximizes that utilization and gives you the most points. And that's what they want to see. So that's what I did.
All right. Awesome. Roller Tape says they have first-time buyers programs. Yep. That's what you got into, right, Jason? The FHA, right?
Yeah. Yep. FHA is a first-time home buyers program. Yep. That's what I did. Yep.
Okay. Awesome. Curtis Davis said, great story. And Dalai Lamas is in the building, everyone. Everyone, please say hello to Dalai Lamas. Thank you for joining us, Dalai, and welcome. Curtis Davis said quality over score. I think we already got to that one. That was a good comment there, by the way, Curtis. And let's see. Curtis also says financial capacity, character. Yeah, that's pretty much what they're getting at when they're looking through your application, right, Jason? Like for financial, how much you are able to make the payments, and
Right.
what your character like, as far as like how you managing your debts and
Right.
how you're paying your bills.
Yeah.
Okay, awesome. Curtis says debt to income. Curtis said most people can afford 3 times household salary. How do you feel about that, Jason?
Maybe. It depends on your situation. I'm married with 4 kids, so I don't know if I could afford 3 times my household salary. Some people might be able to. I don't know, but yeah, I probably could. I don't have, like I said, I don't have any debts, just my credit cards and my house and my car now. But yeah, I think most people could.
Okay, awesome. Let's see. Any other comment? If you have any comments or questions for me or Jason, just feel free to leave them here inside of the chat. Janelle says this is an awesome story and a great example of what Jason had went through. He did an amazing job knowing what and how to do this without help. All right, awesome. Thank you for sharing that there, Janelle. Cornell says, I own my own home 15 years now. 2 years after my purchase, I had my loan remodified for a lower interest rate. The bank saw the steady income and our business relationship was concrete. My rate got lowered. So, Jason, is that something you might plan on doing in the future? Like maybe refinancing your home loan to get a lower interest rate or lower your payments?
Yeah, that's one of the things I'm actually going to do. I told myself, like I said, I'm working on my wife's right now. I feel like I'm in control now, and not the bank. I feel like the ball's in my court now since I've got the house, if that makes sense. Because I can monitor my credit and know if it's good enough to go in and get my house refinanced. But I'm not going to do it unless I can lower it 1 full point. To me, it's a waste of time to go in and do that unless you can get it lowered 1 full point. So 6 months or a year from now, when I get me and my wife's score up around 800, if I get an offer, if I feel like I can get it lowered 1 point, sure, I'll do it.
All right, awesome. Cornell said, took my chances. A higher rate can be lowered through time. Yes, thank you for sharing that, Cornell. And Janelle says, if Jason can do it, anyone can do it too also as well. You feel that's true, Jason?
Sure. I mean, it's like I told my wife, I said, getting approved for a house, yeah, that's more you got to go through more hoops and hurdles than getting a credit card. But hey, sometimes you got to take the Merrick Bank Visa just to get a revolving account. Sometimes you got to take a a bad house loan just to get one. If that's the situation you're in, do it. Prove to the bank you deserve it. Pay on it for a year and refinance it. It's yours. Nobody can take it away from you if you get approved for it.
All right. Awesome. And Christopher Hopkins says a truck driver at my job pays his mortgage every 2 weeks. Jason, do you feel there's that's would make a difference, like paying your mortgage every 2 weeks?
I was told that it can lower your interest rate by doing that. I'm gonna try that at first just to see, or not lower your interest rate, help pay it off faster and save you interest. That's what I'm going to do at first just to see how it works. I haven't done it yet, but
Okay.
I'm gonna do it every 2 weeks to see how it works out at first.
Okay. Awesome. Braveheart Chaser Amex is in the building, people. Everyone, please say hello to Braveheart Chase or Amex. Thank you for joining us, Braveheart, and welcome to the live stream. Christopher Hopkins has a comment. He says, your channel has brought my credit score from 481 to over 600 FICO score currently. And I really appreciate that. Thank you for saying that, Christopher Hopkins. Yeah, we try to give you guys, as much information and content as we can about, building credit and increasing your credit scores. So I really do appreciate the compliment. Thank you for saying that, Christopher. So I'm checking here to see if anyone else has any questions or comments. Please go ahead and leave them in a chat. Let's see. Okay, Christopher Hopkins has a comment. He says most credit card lenders wants to see a different credit mix profile. I believe he's trying to say most credit card lenders want to see like a variety, meaning like
Right.
different types of credit. How do you feel about that, Jason?
Oh, sure they do. They want to see 2 or 3 revolving accounts. They want to see an installment loan. They want to see a couple store cards. And the big one, they want that real estate on there. You get that real estate on there and that covers everything. That's the full credit mix. That covers the whole FICO algorithm. You're getting all the points you can get from the way FICO was designed. So yeah, credit mix is huge.
Yeah, credit mix is huge. That's a big thing. I noticed people, that told me that when they lost their installment loan and they didn't have an installment loan on their credit report anymore, that their credit score went down. So pretty much that's the reason why, because credit mix, it makes up for 10% of your credit scores. Now, you may not get the full 10% of it, which is 85 points, because 10% of 850 is 85. But you want to get as many points in that category as possible for the credit mix. And that's the key to getting an excellent credit, is to definitely build up your credit mix, make your payments on time, keep your utilization low. Don't apply for too much credit in a short period of time, to also as well, and keep your average age of credit up or increase it. So that's Eddie Suarez is in the building, by the way, people, and welcome Eddie to the chat. Everyone, please say hello to Eddie Suarez. Christopher Hopkins says he's been at his full-time job almost 20 years. Wow, that's awesome. Great accomplishment there, Christopher. Keep up the good work, too. Let's see if we have any other. Okay, Brian Bauer has a comment. Everyone, please welcome Brian Bauer to the chat. And he says, I could have saved my mom's house from the bank, reverse mortgage. Okay, by doing a reverse mortgage. I knew about credit in 2010. What you don't know will hurt you. And I believe that is so true. What you don't know will definitely hurt you, So, but that's why, someone made the comment here in the chat, said knowledge is power. Knowledge is indeed power. You know, I would have never gotten my credit score to where it is now if I hadn't started, you know, building credit or learning about ways on how to build credit. So great comment there, Brian. Did you want to speak on that, Jason?
No, I think he's right. A lot of people, what you don't know will hurt you. A lot of people just assume they have bad credit just because they don't know enough about credit. You probably don't have bad credit. You probably just don't have any credit. And I think that's a huge thing that needs to be addressed. That's one of the reasons why I wanted to come on here, because I feel like a lot of people get down on themselves and beat themselves up like they're a failure or something because they don't have good credit. I mean, you can fix it.
Right. And any credit profile can be revamped or
Right.
fixed. You know, it doesn't matter how bad you may think your credit looks like, it can be fixed, it can be reversed. Okay. So never give up, never give up. Brian Bauer had made a comment, and everyone, please welcome Brian Bauer to the chat. Thank you for joining us. He says, "Thank you, Jason. Need to learn. Don't live in the past."
Right.
Right, absolutely. So that's what we're about moving forward. And David Amex King Moss is in the building, people. Everyone, please say hello to David Amex King Moss. Thank you for joining us, David. David says hello to Lyndon and Janelle. And I guess heard you was in Vegas, David. I guess you're using those travel points from those American Express cards, right? That's awesome. Okay, let's see if we have any other comments. Okay, so I guess we're at the end of the comments right now. So if anyone has any other comments or questions, definitely feel free to go ahead and leave those comments or questions here inside of the chat. If you haven't already, give this video a thumbs up because it helps YouTube to put this video out in front of more people too also. So Jason, you had an awesome experience there. This was your first home, your first mortgage application. I'm sure you and your wife, your family, are very excited about this new home too as well. So what are your plans moving forward?
Just let the garden grow, man. I'm not doing nothing for a long time. I was just looking. I just pulled my types of credit used. I've got 16 total accounts right now. I've got 10 revolving, 4 installment, and I'm sorry, 12 revolving and 4 installment. So I got 16 total accounts, and I'm waiting on my real estate to hit, which would make 17, and I'm done. Right. I'm not doing nothing for a few years, and I'm going to go for that Chase trifecta.
Right. Great plan. Yeah. Great plan. I believe David Amex King Moss has a question for you, Jason. I put it up there on the screen for you.
I gotta say, my favorite credit card is, man, I like to Discover It. I love it. I got a $5,000 Navy Federal card. I got a Visa card. I got the Citi. I've got 2 or 3 authorized user cards and my wife's. I use the Discover It every day. I don't even carry cash, man. I swipe it every day because I get that cash back, but I pay it off twice a month, and I always let it report a zero balance. So I love my Discover It, man. I don't even carry cash. I use that every day.
Right, and that's a good strategy there because, as far as I know, the Discover It credit card, they match all of your cash back at the end of the year. Is that right?
Yeah. Yep. Sure do.
Yeah, that's just an awesome card. The Discover It. Let's see. I think we have another comment. Brian Bauer says, what I meant to say wasn't able to save the house, that he wasn't able to save the house. Okay. Not enough credit in 2010. Now I know what I should have known back then.
Right.
Okay. Well, now you have the opportunity. You're more informed now. So that's a good thing, Brian. So, maybe you'll have uh better fortune, next time, you know. But building credit, there's no better time to start than now. Definitely start building that credit. You probably have already started building credit, but I'm just saying, you're doing a great job. And thank you for the comment too. Also, Janelle says, thank you for joining with us and sharing our story. Again, congratulations on sharing your story. Congratulations on your new home. Christopher Hopkins says, my Capital One Quicksilver card is a great cashback credit card. Yeah, I heard about that card, Christopher Hopkins. That's offers, I believe, 1.5% cash back. Great card for cash back, and it gives you cash back in general categories, like many different. It's more like an everyday card. So that's a good thing. What I've liked about the Capital One Quicksilver one card also. Eddie Suarez says, I have that card. Very good one. So, Eddie, you're talking about the Discover It credit card, right? Or are you talking about the Quicksilver? Gary Bluen says, thanks for a good stream. Again, congratulations to Jason. Good night, Lyndon and Janelle. Okay, so if anyone else has any comments or questions for Jason or I, definitely leave them inside of the comments here for sure, because I'm at the end of the comments right now. So we'll give you guys maybe, what do you think, Jason, another 3 minutes or so?
Yeah, I'm Eastern time, man. It's 11:30. I'm about to tap out. I got I got up at 3:00 this morning from work, so it's about my bedtime.
Okay, I got you. I got you there. All right. So thank you so much, everyone, for joining, our live stream, and thank you, Jason, for coming on with us too. We
Sure.
appreciate, you sharing your experience, getting approved for the mortgage, and we know you've been one of our subscribers for a long time here on our channel. You've been watching our videos too, also. So we appreciate you coming on here and telling your story. So everyone, if you haven't already, definitely hit the thumbs up. It helps YouTube to put this video in front of more people. To also, so if you're interested in ways on learning how to build credit, how to increase your credit score, how to get approved for the lowest payments on mortgages, lines of credits and loans, business and personal, or maybe you want to travel the world for free or make extra money using credit cards, definitely hit the subscribe button, hit the bell for notifications too also as well. So that way you'll never miss a single video as we make them here on this channel. And thank you to all of you who have been with us here tonight. Thank you so much, Jason, for coming on with us. Really appreciate you. So we're pretty much going to wrap this up. And if you have any other comments or questions, you can leave them inside of the comments here after the video is over, or you can definitely email me if you have a question about credit or fixing your credit or credit scores, anything like that. You can join our Patreon. Feel free to do so. Too, also as well, we have a credit group on Facebook that you can join. We have a Facebook page, like our Facebook page. And if you're watching this on a replay and you cannot send a super chat or support the channel, feel free to send a donation using the Cash App to $ Lyndon Baptiste. And here's a number you can call if you'd like a free credit consultation, or maybe you might have a video request for us to do a video on a certain topic or a question too also as well. So thank you again, Jason, for coming on. So we're about wrapping this up right now. And from all of us, from Jason Vanhoose, Janelle, our two kitties, cats here, Panda and Bridget. You guys know about them. Me, myself, Lyndon, and all of us here at the How to Get an 800 Credit Score family. Stay safe, be blessed, and we'll see you guys in the next one. But bye for now.